Sunil, what do you think would be the underperforming pockets in the market in the very near term?
I still think the export-oriented pack is the one which is both sentimentally going to be affected by the tariff costs and the slowdown in the world trade as we now move to a multipolar world thanks to the Trump's tariff tantrums. At the same time, another factor to look at is in terms of dumping by China. See, one of the reactions to Trump tariff thing is if China is taking a very hard stance and there is a slowdown, they are likely to try to dump into other countries. Now, India can put import duties and prevent those Chinese dumping from coming here. But if they go to other countries and are export-oriented sectors. So I think it's a time to be cautious around the export front until this tariff scenario. So that's the first thing which is going to get impacted. And I think it makes sense to wait and watch.
Stay away from some of these export-related counters and place them. That's the word coming in from Sunil. But another stock within the F&O space that after so many days is doing well is Can Fin Homes. The stock is up around 4% in trade. But Naresh, how do you see the technical setup for this particular counter?
The stock has made a good recovery in the last 3-4 session, but overall trend is weak. 660 is the first resistance and next is at 700. So for now, the risk reward is not great at current levels. Should see a lot of selling pressures around 655, 660 levels. So would wait out, let it make a base and then maybe look at it.
Right, so wait out and the stock should face some bit of a resistance at these levels. But Sunil, the life insurance counters, any take on this one? Because off late what we are seeing is that they are not participating much in the recent fall, and some of these fund managers seem to be liking this theme along with financials. So and do you also like life insurance as good place?
I think it's largely the demographic dividend story of India, right? As the younger population comes through, awareness comes through, digitization is coming through. Insurance is one where your now digital access to signing up on new policies is coming up. Penetration is still low. Now with foreign insurance companies coming in, the market penetration should improve. So overall, I think that as a part of the BFSI pack, right, apart from the lending pack, this is the investing pack. And I think insurance is an important thing. Awareness has gone up, and I think that will flow through. So in the short term, there could be volatility, but I think from a medium-term perspective, I will be a buyer in the insurance space, especially even life insurance.
That's the take coming in on some of the life insurance plays. Today, Zomato is the one which is actually cracking quite hard. About a 4% cut is what you're seeing on that stock. There were some reports doing the rounds that perhaps the convenience fee on some of these platforms, the food delivery segment, that is, both Zomato and Swiggy, for perhaps new subscribers, there's been a discount which has been added to that. It's clearly a bit of a tug of war now at play to try and add in more subscribers and get more market share. Even Swiggy has been under pressure, although a very different chart pattern as opposed to what Zomato has had today. Naresh, what is your sense on Zomato? Currently around that 217 odd print. Where do you think the stock is going to settle in next? And does it seem like there could be some more weakness?
So the previous breakout point was around 240. We saw a breakdown and when the stock went to around 200 odd levels. The last two attempts it has stopped around 240. So for now, it looks like a stock which could range between 210, which is the recent bottom, and 240 as the upper band. If it goes beyond this zone, then we get into a trading move. For now, it could remain pretty sideways for the next few weeks. So that's the range 210 to 240.